Gentlemen, what we're doing today, we are looking at what we call break-even analysis. Yeah, break-even analysis, and my question of reference is what was tested last semester's exam was the easiest ever. I've never seen an easy exam than that. I've never seen an easier exam than that. So I would want us to look at this particular question here, which is question number 2B. Remember, we are done A. So today we are looking at part B of this question. So this is Ocean Resort. Is a holiday resort that is operated for 30 weeks each year. Each guest is charged 80,000 per week. The weekly variable cost incurred by the resort per guest are as follows. So we have food and drinks, electricity cost for lighting and cooking, laundry expenses, tour guide and entertainment, Wi-Fi costs. The fixed cost incurred by Ocean Resort comprised the following costs. We have staff, labor costs for 30 weeks, recreation and accommodation per annum. We have annual property rates on land. We have administrative expenses per year. The following inflationary changes are expected to occur during the year ending 31st December 2025. Number one, the expected number of guests for the year ending 31st December 2025 is 12,500 guests. Number two, the charge out price per guest will be adjusted downwards by 5% in order to attract more guests. Adverse material price changes of 3% is expected on food and drinks. There will be a decline in electricity cost by 10%. Tour guide and entertainment cost will be increasing by 8% due to rise in fuel levy. Due to competition in internal services, free Wi-Fi cost will reduce by 20%. All other factors are expected to remain constant. So they want us to calculate the number of guests to be served in order to break even. Ladies and gentlemen, remember, break-even analysis is also known as profitability analysis. So whenever we talk of break-even analysis, we always know that this is also known as profitability analysis. Is also known as profitability analysis. And this, of course, is also known as the CVP analysis. CVP, this stands for cost volume profit. Analysis. That is CVP. So anytime you hear an examiner talking about break-even analysis, always remember the profit equation. And if you remember very well, profit equation, our profit will always be equal to total contribution minus fixed cost. Our profit will always be equal to total contribution minus fixed cost. So anytime you want to get profit, ladies and gentlemen, you get profit by getting the total contribution minus fixed cost. So this is CMX, this is total contribution. Ladies and gentlemen, this CM stands for what we call contribution margin, which is the same as contribution per unit, Now, the most important thing that I would want to sell to you this afternoon, ladies and gentlemen, is the formula for getting CM. How do we get contribution margin? So if I'm selling a pen like this one here that I have here today, if I want to know how much each pen is contributing towards my fixed cost and the growth, towards my fixed cost and profitability, I look at the selling price minus the variable cost that I incur to produce the pen. So anytime they want me to give them contribution margin, it will be price minus variable cost. So contribution margin is selling price minus variable cost. So anytime they want me to give them, ladies and gentlemen, contribution margin, contribution margin will be selling price minus variable cost. I wish somebody can write this in full, because this is the price that I'm selling these goods at. The selling price minus the variable cost, minus the variable cost. Selling price minus the variable cost. Then let me go back to the profit equation. We've just said pi. Pi in this case here does not stand for 22/7. Pi does not stand for 22/7 that we are used to in high school. No, pi is profit. Whenever you see pi, pi in this case here gives us the total profit. And this total profit, we've said it is CMX minus F. CMX minus F. I forgot to tell you that X in this case here represents total quantity produced. Total quantity produced and sold. Total quantity produced and done what here? And sold. Total quantity produced and sold. That is X. And this F stands for what we call fixed cost. The fixed cost. Remember in the other session, we defined our various types of costs. We said that fixed costs are those constant costs. Costs in this case that do not fluctuate. Yeah, they are normally periodic. You see, for example, our homes. If you're to close your home and go on leave, say to Hawaii, go in this case here on leave to, for example, Sweden, the whole month, there is no family member who is in this particular house of yours. You will not come back and tell your landlord that, you know what, I wasn't there in the month of December. Rent is a periodic, it's paid on a monthly basis. So if it's periodic, it does not depend on the number of units, the number of people stayed in this particular house, then all periodic expenses are normally fixed costs. Like salary. Salary is periodic, it's paid on a monthly basis. So that automatically will be fixed costs. They are ever constant. Now, ladies and gentlemen, I would want you to really understand this from the word go. That at break even, profit equals zero. If I were you, and perhaps I happen to be a member of UDA, I'll be able to write this and use a yellow highlighter on this. I must use a yellow highlighter. And then, of course, if you are a member of any other political party, you know your political party's colors. Yeah, that's a joke, but I would want this to be highlighted. That we say that we have been able to break even when we make zero profit exactly. We are not making bigger profits. We are not making losses. At the break-even point, profit is zero. And I liked a student who said that Mwalimu at break-even, revenue equals cost. I'm not able to make profits at all. But you see, I'm happy because at least all the expenses that I incur in my farm have been catered for by all the revenues you collect. So I don't need to go to a bank to get any money to run my business. At the break-even point, the business is able to run itself, even if it's not giving me any profit on top, ladies and gentlemen, by the mere fact that this business is able to run on its own feet, I'm happy. So at the break-even point, profit is always equal to zero. Let me come back here. Very important. So you're saying that at break-even point, profit is zero. And we have just said that our pi equals CMX minus who? And we are saying that at break-even point, this profit is zero. This profit is zero. So, and if that is the case, go ahead and make X the subject of the formula. Make X the subject. Make X the subject of the formula. If you try making X the subject of the formula, this CMX will be equal to, when this crosses over, then it means that the CMX will be equal to F. I would want X to be left on one side alone. So I must come here and divide by CM. I divide by CM. So that at the end of the day, this and this cancels, and we are getting a very important equation that nobody will ever tell you to derive. There is nobody who will ever tell you to derive this. We must, ladies and gentlemen, at all times, be able to remember that if you want to get the number of units required to break even, BE stands for break even, then you take the farm's fixed cost, you divide by contribution margin. You take the farm's fixed cost, you divide this by what we are calling contribution margin. So I would want in this case here, by a show of togetherness, are you able to put your thumbs up like this if you're able to follow? Or if you're not able to put your thumbs like these, then you can go ahead and write there Y for yes. Are we together up to here? Thank you so much. I can see so many thumbs that are up, which is really, really good. Thank you so much. So don't ever imagine about deriving this. Don't derive this. Don't derive this. What you're required to remember, ladies and gentlemen, for your examinations, is that to be able to break even, you'll always take fixed cost of the farm, you divide this by the CM. So then, having understood this, we should be able to attack. We should be able to attack this past paper question, which was really easy. This was an easy exam. There is nobody who should have failed. But of course, if you failed, come December, you'll be able to pass. Now, ladies and gentlemen, you can see here, they have given me, they have told me that each guest is charged 80,000 per week. The weekly variable cost incurred by this resort per guest. So they've given us weekly variable cost. So, ladies and gentlemen, I want to get my contribution margin. How do I get my contribution margin? I will have to write the variable cost. Let me get the variable cost first of all. Because I know the price, I would want to get the variable cost. So first of all, we start by reading here. We are told in note number 2, the charge out price per guest will be adjusted downwards by 5% in order to attract more guests. Remember, currently, we are charging 80,000 per week. Yeah, per week. So you're told that we shall be able to take this down by 5%. So then come here and give me the new selling price. The new selling price. So the new selling price will be 80,000, which shall be knocked down by 5%. Because they have told us that we shall experience a price reduction of 5%. You see, normally the price is at 100%. So if it reduces by 5%, it shall be 95%. So the new selling price, I'm being given an answer here, 76,000. Thank you so much. So the new price here is 76,000. Because they have told us that, fine, we had our old selling price of 80,000. But, I mean, given competition, we have agreed to reduce that price by 5%. Other students in this case, I would prefer they take 5% of this 80,000, which gives them 4,000. And then they take 80,000 minus that 4,000, that still will make it 76,000. Thank you so much. So we have the new price. What else do we have, my good students? So as of course I share this handout, don't forget that you're getting this free of charge class today from RCM College. RCM College, we are based at Commonwealth House. For the students who may want physical classes, please come to Commonwealth House, Nairobi. We are right opposite Galitos along Moi Avenue. Yeah, so you come over here and you'll be able to get us here on the 5th floor, and we shall be able to teach you right from here. Physical classes, we are charging 7,000 per paper. Yeah, and of course, any student who is not in Nairobi and would want to study with us, you're welcome, because we are the biggest virtual college. So you can easily access our signal from wherever you are. So you get to study with us through Zoom, and you pay 4,800 per subject. 4,800 per subject if you're studying with us through Zoom. If you're interested with our classes, then this is our number. Please go ahead and call us. You'll be able to get very, very good teachings from these chief ninjas. We have other ninjas, of course, that I teach with. But for management accounting, especially the day class and the special revision, I'm the one who is taking care of special revision. All right. So Judy Neno wants somebody to share the past paper. That will be very kind of you. Yeah. So in this case, then we go to the next statement. Number 3, adverse material price variance of 3% is expected on food and drinks. Ladies and gentlemen, remember we have got 2 types of variances. We have adverse variances and favorable variances. Assuming Today you had planned to incur a cost of a transportation cost of 100, bus fare, 100. And then in this case here, we have rain. Rain, of course, especially if you're in Nairobi here, it makes motor vehicle prices, bus fare to go up. So instead of you paying the 100 you are prepared to pay, you end up paying 150. You end up paying more. So you see that variation of 50 is bad on you. It's an adverse variance. So for costs, whenever you hear of an adverse variance, costs will always increase. Costs will always increase. Cost will always do what here? Cost will always increase. So like now here they have told us that for materials, we have a price variance, adverse one, 3%. Yeah, material price variance, 3% adverse. So in this case here, we have material. So do we have material? Let's read here. Adverse material price variance of 3% is expected on food and drinks here. So food and drinks here, initially it was 20,000, but we expect this actually to vary and it's going to increase. So we have here food and drinks. So we have food and drinks. Food and drinks. Initially it was 20,000, but now we expect it to increase by 3%. So you can talk of 103% or 1.03 because it's an adverse variation. So adverse means that this is an expenditure. It's going to increase. So then how much will this give us? So according to Marcia Tor, she's getting 2,600. 2,600. But now remember, if it was an adverse variation on price, selling price, if it's an adverse variation on your selling price, it would have meant that the selling price would have reduced because that is a negative impact on the business. So I repeat there, whenever told that your selling price has been adversely affected, we reduce it. Whenever you've been told that your costs have been adversely affected, that means that your costs are increasing. Yeah, so you go ahead and read the next item. Let's go ahead and read the next item. So the next item that I would want us to read, ladies and gentlemen, is as regards to, we are told here, there will be a decline in electricity cost by 10%. So we have electricity costs. Electricity cost, where are the electricity cost here? Yeah, by 10%. So we have electricity cost. Initially, it was 2,400, but now because there is a decline by 10%, I will simply take 90% of that figure, which is the same as 0.9. The same as 0.9. Remember, initially electricity cost here was 2,400, but there is a suggested price reduction, which is the same as favorable variance, 10%. 10%. Then this one will end up giving us what figure? This one will end up giving us what figure? Now they are not talking to me. I can't see them talking to me. And the way I would really, really love to hear from my, 2160. So this one is giving us 2160. Remember, this is something we're deducting. It's a cost, It's a cost. Now, ladies and gentlemen, apart from that, what else do we really have around? What else we have around is this. We are told that the tour guide and entertainment cost will increase by 8% due to a rise in fuel level. So this tour guide cost, tour guide. So we have here tour guide. So the tour guide, currently I can see tour guide is 8,000. It's 8,000, but they are proposing to increase it by 8%. So I can either write this as 108, the new one, as 108%, or 1.08 or 1.08. Can somebody in this case here give me this answer? Tour guide cost will be going up by 8%. Will be going up by 8%. Will be going up by 8%. So tour guide, how much are we going to get? 8640. Tour guide is 8640. Thank you so much. Do we have any other variable cost? Let's see. Let's see. So, ladies and gentlemen, we have here what they are calling, due to competition, Yeah, in internet services, free Wi-Fi cost will reduce by 20%. So the Wi-Fi costs will be 3250 times 80%. So Wi-Fi will be 3250, sorry, times 80% or times 0.8, because you can see a Wi-Fi cost reduction. A Wi-Fi cost reduction. Thank you, Emily, for giving me 8640. Yeah, so how about Wi-Fi? So Wi-Fi, I'm being told it is 2600. I'm being told it's 2600. Then you ask yourself, is there any other variable cost amongst the variable cost given which is not going to change? Which is not going to change? Which is not going to change? Which will not be changing? Which will not be changing? So we have, yeah, you can see laundry expenses. They haven't mentioned anything to do with laundry expenses changing. So laundry expenses, I'll pull it the way it is, then I write it there. So we have laundry expenses. So laundry expenses. So laundry expenses. So laundry expenses, what do we have there? 4,000. So then come and give us what we call contribution margin, which is selling price minus all variable costs. So remember, selling price is this one. All these are variable costs. So I would want you to come and give me the selling price minus all the variable costs. So then what are we able to get as our contribution margin? What are we able to get as our contribution margin? What are we able to get as our contribution margin? What are we able to get as our contribution margin? So somebody is saying 38,000. And if you look at our marking schemes, how we really mark these things out, yeah, and I'll be able to share this with all students here who have paid fees to RCMA. They always get, super services. So you can see in this case here, yeah, are you able to see contribution is 38,000? Anybody who is, and you can see everything he has a mark. I can tell you, if you are proper guided, you'll never get a fail in management accounting. We are very lenient. You can see all these nonsense as we've been doing around here, they are getting a tick. And then they come and say any 12 marks at whatever, or whatever. But you can see so many ticks. Easy. You pass without sweating. So they're getting 38,000. Yeah, they're getting 38,000. They're getting 38,000. Thank you so much. Now, ladies and gentlemen, after that, in this case here, don't forget what your examiner wanted you to do is to give him or her the number of guests required to break even. The number of guests required to break even. This was the first requirement here for this question. This was the first requirement here for this question. Easy. So you can see here, they want us to give them the number of guests to be served in order to break even. So in order to break even, what do? Come and give us XBE. We know the formula of XBE. We know that X break even is fixed cost over contribution margin. Already I've been able to get the contribution margin. Now I only need fixed cost. And the fixed cost was an easy thing. Yeah, to get fixed cost really here. There were no changes on the fixed cost given here. The fixed cost in the card by Ocean Resort comprised the following costs. So is there somebody who is able to add all these fixed costs for me, please? You take 108 million plus 95 million plus 43 million plus 134 million. So is there anybody who is able to add all this and lump them together? Give me a figure. 108 plus 95 plus 43 plus 134. What are we able to get? What are we able to get? So a good ninja, Olango Francis, has given me fixed cost total of 380 million. Yeah. And in this case here, therefore, fixed cost here is 380 million. divided by our contribution margin of 38,000. So in this case here, X represents number of guests. So how many guests do we need for this resort to break even? How many guests do we need for this resort to break even? X break even, when we started this, I explained for you, yeah, how to get X break even. So it's really, really easy. It's really, really easy. So 380 million divided by 38,000. They're giving me 10,000, 10 million. I don't know who's telling me the truth. Yeah, remember, this will cancel out, isn't it? Yeah. And then 380, yeah, 38, and this one here, yeah. So it'll be 10,000 guests. Again, use your calculator to avoid these cancellations. Use your calculator. Use your calculator. So up to there, ladies and gentlemen, are we together? Are we together? Are you liking the lesson? Are you liking this Chief Ninja? And I hope you are able to also acknowledge that RCM is a great college. I mean, which college will be able to give you no more classes, and then they also bring you on board in terms of this kind of revision classes, what we are calling special classes. It's only RCM. Yeah. And in this case here, RCM, for the students who are new here, who would want to join us for management accounting, don't forget our number is 0793 555 000. 0793 555 000. Thank you so much. So can I go to number 2 of this question? Can I go to number 2 of this question? Can I go to number 2 of this question? Proceed, yes. Thank you so much. So number 2, they simply wanted us, ladies and gentlemen, to give them number of guests to be served to earn a profit of 43,700,000 for 43.7 million targeted net profit. So that is really useless question. Very easy question. I'll do it with my eyes closed. I'll do this one with my eyes closed. In this case here, they want us to give them not X break even. This time around, they want us to give them quantity for a targeted profit. So they want us to give them quantity X for targeted profit. Quantity X for targeted profit. So first of all, I have to do fixed cost recovery. I recover my fixed cost in full, and then now I go for the profit that is being targeted. And then I divide this by CM. Remember now I can't write here X break even, because at break even, the profit you're targeting is 0. At the break even, the profit you're targeting is 0. Here they want a different profit. So the quantity, which is X, to be sold for us to achieve for 3.7 million, it will be this X, will be the fixed cost of 380 million, plus in this case, the profit you're targeting of 43,700,000. Divide this by contribution margin of 38,000. So you go slowly. First of all, do the numerator. You do the numerator. You take 380 million plus 43.7 million plus 43.7 million. Yeah. Plus 43.7 million. You say equals first. Whatever answer you get, you say divided by 38,000, and then you give me an answer. And then you give me an answer. From the solutions given by your examiners, in this case here, if I read it for you, yeah, so here, in terms of those people that we need to be able to get that 43.7, so is there somebody who is able to get 11,150 guests? 11,150 guests? 11,150 guests? Anybody who is able to get 11,150 guests? I can't hear you. I can't hear you. I can't hear you. 11,150 guests. Yeah. Remember, I know so many students will do and they go wrong. Someone will say 380 million plus 43,700,000 without saying equals. They say divided by 38,000. So they end up dividing this only by 38,000. Remember the procedure. You take 380 million, you say plus 43,700,000 equals, and then you divide by 38,000. So then this one will end up giving us 11,150 guests. guests like that. So is there somebody who has been able to get, they got this, like Itiame got 11,150 guests. So not unless there is somebody who has a special question there, I will be able to go to Roman 3. I will be able to go to Roman number 3. I'll be able to go to Roman number 3. So Roman number 3, what do we have over here? Roman number 3, what do we have over here? Profit that would result if 150,000 guests are served. So they want me to give them, number 3, the profit that we will get if we serve 150,000 guests. Easy peasy, easy peasy, easy peasy, very easy. This is very easy. The profit we shall be getting if we serve those number of guests. Fortunately, we know the profitability analysis equation. We know that anytime they want us to give them profit, we shall always use this minus fixed costs. So the profit we shall get will be the 38,000 times the number of guest quantity. How many guests are they looking at here? They've given us how many guests do they want us to analyze? How many guests in Roman 3? How many guests do they want us to evaluate their profitability? How many guests? Number 3. It's written there. I don't have to open my question. 150,000. So 150,000 minus fixed cost, this does not change. The fixed cost here was 380 million. This will never change. This doesn't change. That will never change. So then can somebody in this case here go ahead and give me this profit? So take 38,000 times 150,000 minus 380 million. What answer are we able to get? 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 Yeah, if you're correct, then from your examiner solution, not unless you guys are pretty wrong, from your examiner solution, what in this case here you should be getting from your examiner solution, this should be 53,20,000. 53,20,000. 53,20,000. 53,20,000. So is there somebody who is able to get this 53,20,000? 53, we'll be having other zeros, eh? Yeah, so long as you have it, 53,20,000. Yeah, they cut the 3 zeros like that. Huge profit. If I got this kind of money today, I'm so sure that I will not be here teaching you management accounting. No. Even if I get the billions and trillions, ladies and gentlemen, I will still come back and teach, because teaching to me is a passion. I love teaching. So up to here, ladies and gentlemen, have we been able to really follow? Up to here, have we been able to really follow? Up to here, have we been able to really follow? Mohammed, yeah. Lillian, yes. Thank you so much. Olango, great. Great, thank you, Moses, together. Great. Then we go to the last question. This last question, what do they want us to do? This last question, my great students, they want us, in this last question, this is what they want me to do. In this last question, this is what they want me to do. If you look at number 4, number 4, if the expected number of guests are how many? I've lost my past paper. Is there somebody who can tell me, if the number of guests, I've lost my past paper, it has disappeared miraculously. Yeah, so number of guests are how many? So they asked, if the number of guests are 12,500, how much will the weekly profit be? How much will the weekly profit per guest? If the expected number is 12,500, determine the profit per week. Yeah, so profit per week. So long as, ladies and gentlemen, we have expected number of guests, I'll get all this very easily. I'll get this very, very easily. Thanks for giving me that. So first of all, I'll get the total profit. I will get the total profit. The total profit is pi equals 38,000 times that 12,500 minus fixed cost of 380,000, 380 million. So first of all, give me that figure. First of all, give me that figure. So the students who attempted this paper last sitting, were you able to do this question the way I've done it? Were you able to do this question the way I've done it? The students who attempted this paper last sitting, be honest with me. Yeah, so they're saying no. The beautiful thing is that come December, you shall be able to show your examiners dust. Come December, you shall show your examiners dust, because now I'm here to walk this journey with you. I'm here to walk this journey with you. Got confused in the exam room. We shall pray against that spirit. And again, remember, for you to be able to overcome confusion, you must exercise a lot. You must practice a lot. You must practice a lot. Let me ask you another question. Have you now been able to register with the RCM for MA? Do we have a student who has now already registered with the RCM for management accounting? It doesn't matter whether you're in early morning or evening. Are you with us already? I'm a student. Great. 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 Yeah. Then now we are okay. Yet, to Lillian, you need to join. You need to join. And to join us, what do you need to do? You simply need to pay us, 0793 555 000. That is the number you need to call and get to know our fees. Yeah. Because now, moving forward, a student already great. Because moving forward, we shall not be having open classes for everybody. No. We shall now be issuing our links to our students who are in the paid group, because we are also in business. We need you to support us. We need you to support us. Yeah. How many ninjas are not yet our students? How many ninjas? How many ninjas PC? Yeah? How many ninjas here? How many students here who are yet to register with us? Maybe see by a show of hands, or a show of, you can even mention, I'm not a student. I'm not a student. I'm not a student, or I'm yet to. It's good for me to know. It's good for me to know. It's good for me to know how many of you are not yet our students. Can even say me, and then I'll be able to know what to do. Then it seems not yet. At least I have one Enkorogosi. Yeah, not yet. It's registered for it, doing it in the course of the week. Of course, yeah. Lenovo. So those are 3 students. 3 students. Movisa as well. So then if we can agree, if, for example, you know that you are going to pay us, say, next week, or when the results will be released, then we can agree, not results, but salary will be paid. We can agree you pay something like a commitment fee, those students, they get the paid group. They get to the paid group, and then, of course, we shall be able to do what here to ask them to pay us full fees upon them receiving salaries, because we have to walk into this as a team. So they're telling me that this profit is 95 million. This profit is 95 million. Great, Emily. Thank you so much. So that profit is 95 million. And then they wanted us to give them the profit per guest. Profit per guest. This is total profit, and therefore profit per guest. Profit per guest will be 95 million. You divide by this 12,500, which your examiner was able to get as 7,600. Yeah, remember the price being given. The price given is for, it's assuming that each guest is going to stay with us for a week. It's going to stay with us for a week. So profit per guest per week. Per guest per week. Profit per guest per week. So your examiner was able to get a figure of, let me just show you. So perhaps that was a little bit confusing, but remember the price given is given on the assumption that these guests will be staying with us for a whole week. So they used a different method, but at the end of the day, they got these 7,600. But most importantly, you can see they're putting ticks. Whenever they see the fixed cost, etc., they're putting ticks there, and every tick you're getting a mark. So this paper is a procedural paper. It just needs you to know the methodology. Once you know the methodology, then you shall never, ever go wrong. So I'm going to upload this particular video on my YouTube channel, and then I share that link with you on one condition, that you shall be able to share that link with all your friends outside there. Because this time around, I want to come and teach MA full-time. What has not been enabling Mwalimu to teach MA full-time? It is your numbers. You see, this Chief Ninja normally teaches the advanced level papers simply because I know when I go to BDA, I get like 1,000 students. When I come to MA, how many do I have? Like today, if you check the MA group, maybe 200. So we can up our game just a little bit. Then we'll be able to afford me, right? We'll be able to afford this CPA Chief Ninja. CPA Chief Ninja. So for you to be able to reach those great numbers, I depend on you. How do you do it? Simply get this link and share it with your friends. You invite them, you help them. MA is a killer. If you look at, for example, last semester, the students who passed generally, they weren't more than 20%. You can imagine a paper being failed by 80%. And not that the students are stupid, it's because at times in this case here, we lack what we call proper guidance. And you'll see once I take over, like now, of course, we have a special class. Yeah, you'll start seeing how I involve you. I'll be sending you a question like similar to this one and ask you. This time around now, we're not talking about quantity. We're talking about revenue break even. How do we do all those scenarios? You'll see when I come on board with my interventions, you can never, ever fail. You can never fail. And that is why I want you to support me by bringing in many, many students. So like Millie, my good student, please ensure that you have the power to bring 20. So ensure that you bring 20 with you by next week. Otherwise, from me to you, I hope you've enjoyed the session. It's now bye-bye. I'll be calling for another meeting tomorrow. Bye, bye, bye. Yes, I'm in it to win. Olango Francis, yeah. Olango Francis, this is my number. I forgot to send you the lunch. Yeah, this is my number. Please drop a message, an SMS for me to send you your lunch, Olango. Please. Sorry for that. Great. Great. We shall overcome. Yeah, thank you so much. Thank you so much. All the best. Be blessed. Bye.